In this video, we're going to look at 8 clues the market is in a range-bound environment. Stay tuned. Hey traders, a very warm welcome to you. Okay, so 8 clues that the market is in a range-bound environment. So what? I hear you cry, but the point is we want to use the right strategy for the right environment. And so if we're using a mean reversion range-bound strategy, we want to make sure we're in a range-bound environment. Now, I initially did these based on, I need to wipe it off with my finger there. I initially did these based on a long-term view, i.e., this is the kind of thing we're looking at over long-term, and that's really what it's based around. However, we can still use this intraday as well. Some tweaks which we'll go through as we go through the list. But the important thing here is the reason we're looking at this is we can perhaps put together a kind of plan, a checklist, so we know to use a trending trading strategy or a range-bound trading strategy. So there's 8 clues that we can perhaps put into our trading plan to help us become better traders, which is what we're all trying to do. Okay, let's go. Number 1 is resistance levels become more defined. So support and resistance levels become very, very clear. You get multiple touches of the level. And if you're intraday trading, you're looking at, I think it's going to break, never does. If you're trading over a swing trading, longer time frame, it comes down, maybe it goes up for 2 or 3 weeks, comes down, tests again, looks like it's going to break through, doesn't break through. It's very, very well defined levels, and it looks visually like you're in a range. And obviously that's the number 1 thing is just using your eyes and saying, well, is actually the chart showing we're in a range bound environment? But when we're in range, they are very much clearer. They're well defined, and they just jump out the screen at you when you're looking at your daily chart or whatever time frame you're looking at. All right, number 2, traders get frustrated by the fake outs. I'm gonna hold my hands up to this, trying to force breakouts in range bound environments intraday. It's something you've got to be careful of. Same with your swing trading. Whatever time frame you're looking at, if the market is in a range-bound environment, the likelihood is it's going to stay in that range-bound environment. And you get frustrated. You see people on social media getting frustrated that, hey, this isn't breaking out. Why is it not breaking out? It's breaking out, then it's stopping. It's breaking out, then it's stopping. And we get this continually until people kind of give up on it, and then it maybe breaks out. So, 1, being cautious, you're not the trader that's getting frustrated by it. But 2, watching other people and other traders getting frustrated by the fact that this thing is not breaking out. All right, number 3, news doesn't move the market much. Often in this range-bound conditions we have, news will come out that isn't really that strong one way or the other. And it'll be a nothing event. This might be economic data. It might be kind of earnings. If we're looking at stocks, we're looking from a stock perspective, but I'm really looking at the broad indices here, or the individual indexes for each of the global economies. But news isn't that important. Jobs numbers aren't that high. Interest rates aren't changing. We're not at the cycle, we're not at the turning point of the cycle. Nothing really happens, and so you get like a little bit of flash up and down, and then nothing goes on. There's no catalyst to really force it and make people pay up above those clear resistance, or pay or sell below those clear support levels. All right, number 4, correlations between asset classes break down. This is quite a common one, and actually this can screw you over if you're trading a pair trading strategy like gold against equities, bonds against equities, that kind of thing, and you've got a correlation that has worked for a long time. It starts to break down a range-bound environment because there's no reason for people to go on the risk-on, risk-off attitude, because the market's not going anywhere. The range might be quite large, but as it gets to the top, it's like people aren't that bothered. We're not getting that, money flowing from one asset class to the other. And so as such, those asset class correlations start to break down, which screws over some people's trades who have got that kind of strategy in place, that mean reversion between the two, kind of pair trading the two. So just watch out for that. And the way you can tell that if you're not actually involved in this kind of trade, it's just kind of Googling this kind of correlations between whatever you're looking at, and then you can see if that starts to break down and say, well, actually that's another perhaps potential tick in the box to say we're in a range-bound environment. Number 5, obviously from a technical perspective, we all know this one, the moving averages go flat and they cross many times. So in a range-bound environment, as you may well be aware, moving averages are going to flatten out because the longer we're in a range, the more likely that even the longer period moving averages start to become flat, and they're going to cross over and over and over. And everyone who's trading moving over crossover strategy is not doing very well. So just look and see how often the moving average has been crossed over. This is kind of eyeball as well with the definition of resistance and support levels. Okay, what we've got now, we're at number 6. Momentum strategies don't work. Seems obvious, but actually, we can be guilty of just trying to force a trading condition or trading strategy in an environment that's not really ready for it. And that's a big clue. If you're trading a momentum strategy, breakout strategy, buying pullbacks, doing this, doing that, it's not working, you're not getting those price extensions, it's a big clue to say, hey, you know what? I probably need to take a step back and look at the bigger picture here and say, actually, you know what? We are probably in a range-bound condition. I need to be careful not to try and push too aggressively and respect this. And that can kind of be the early warning sign. It is for me. If I'm caught, especially intraday or intra-week, playing this kind of strategy, and then it's not working, not getting the kind of results you want, then it's sort of a red alarm, red flag that says step back and just reassess. You might be trying to force something that's not there. Okay, last two, guys. Number 7, leading stocks are also range bound. So this is more of a swing environment. The stocks that have been doing very, very well, trending nicely, are also kind of spending a lot of time in ranges before they push on. That's a good little clue. And the final thing, number 8, news flow is slow. The media has to put out news. The media has to still put out its regular stories, fill its articles on its websites, all that kind of stuff. And when it's the same old stuff coming through, it means that there's no catalyst for the bigger players who have got the money that moves the market to get involved. And that's what we need. If we're in a range-bound condition, the thing that makes us break out of the range-bound condition isn't you trading, isn't me trading, it's the big guys who believe there's a big move about to happen, and so they put some money to work. And to do that, they're going to need a catalyst. They're probably not going to be trading just because they think it's going to break out. There's going to be something happened on a macro level or whatever it is that makes them want to allocate capital to it. And if enough traders do that, or enough funds do that, or enough money does that, then we get those breakouts. So keeping your pulse on the news flow and saying, you know what, nothing's happening. It's not changed. Nothing's really exciting. There's no big catalyst here. Money's not flowing in. It's a range-bound environment. So these are some things, guys. Any of you have got, stick them in the comments section below. Range-bound environment. One to avoid, obviously, if you're trading momentum strategies, but one to seek out if you're trading those mean reversion plays and you like trading the fake outs, you like kind of shorting at highs, buying at lows, and using that as a guide and kind of trading against the people who are looking for momentum. So just some clues to look for if you're trading in a range-bound environment. All right, guys, take care. Keep your risk managed. I'll see you in the next one. Goodbye.